Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me on Options Expiration Fridays, he does each month, is Mark Sebastian, COO of Option Pit, to discuss trends in volatility, VOLQ, and now VOLQ futures, which just started trading on CME on October 5th. Mark, it's great to have you back with us on Trade Talks. And, you know, the VOLQ's future contract is now trading on CME, and you've noticed that the curve is backwardated. What does it mean when it's backwards, and what does it imply?
Yeah, so when the curve is backward, what that means is that the nearer dated futures are more expensive than longer dated futures. And that's a rarity. We've been in that state for a while. If VOLQ futures had been trading for the last 6 months, they would have generally been in that shape. But it feels like they're entirely geared up for the upcoming election because the October future is priced above November and November above December. We've seen a little bit of the futures trading in October and December, and it feels like people are playing for volatility to potentially be really high for the next few weeks and then back off once we have the presidential election. And that's where this backwardation comes from. When traders see backwardation in a volatility future, it tells us that the market is afraid of what's directly in front of us more than the long term. And that's the way VOLQ is shaped right now.
See, that's really interesting because from a fundamental perspective, people are nervous that we won't get a decisive answer on November 3rd, and it might play out a bit more. So I'm wondering if it's specific to those stocks within that index versus the overall market. So that's interesting that you noticed that. And you also noticed that the way options are priced, and it's not something that you've seen since the late 90s.
Yeah, I mean, it's really the way, if you, this is kind of breaking down into the triple Qs. What was really fascinating, VOLQ is an at-the-money measure. So it's really looking at the cost of a straddle in the triple Q. And Monday the 12th, when the market was up 3% on the day, we saw the market go straight up and volatility rally with it, which means as we were running, the calls were getting more and more expensive. The VOLQ was acting like it was chasing the Nasdaq up. And what that also tells me is that we have kind of a smile in the skew curve. So normally options are priced where puts are more, out of the money puts are more expensive than out of the money calls, right? Because people naturally hedge with puts, right? They're worried about the market going down. When you see VOLQ act the way it was, it tells me that people are selling the Qs and buying calls or straight up chasing calls. And that actually was a little bit of a sign of a top. And lo and behold, the 12th kind of felt like a little bit of a blowout top because the rest of the week wasn't very good.
Now that's really interesting because we saw this happen just about a month and a half ago as well. So which leads me to my next question. What trade works knowing this?
Yeah, so a trade that I think is really interesting, and this is one that I'm really thinking is going to be a use case for the VOLQ future because it's based on the at-the-money implied volatility price. The Qs are really moving around a lot, the triple Qs, the Nasdaq 100. And the best way to take advantage of wild movements is with a straddle. The issue you have with straddles is that it also, on top of exposure to movement, it gives you exposure to volatility or vega, which is, you know, the insurance value of the options. Well, the VOLQ future is a straight play on that vega, that insurance value. So I can buy a triple Q straddle and sell a VOLQ future against it, which would isolate the gamma and remove a chunk of my vega exposure, allowing me to only play movement in the triple Q, which is what I think I would want to do right now because that thing is flying.
Yeah, all good points, Mark. Great to see you. Thanks for joining us on Trade Talks.
Thanks for having me.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.